There's a good chance that rates could be cut in the not so distant future. Few factors that go into that. A lot of this is based on a slowing economy, moderate inflation, and a weakening job picture. This means the Fed will most likely be forced to start cutting rates. So should you wait for the Fed to maybe cut some rates and see what happens in the market before you make that home purchase? Well, the answer might surprise you with what I'm going to say. Don't worry, I have an argument for both. But what we're looking at is that if rates come down 1 percentage point, according to the National Association of Realtors, when that happens, or if that happens, that means 5 million more buyers are going to enter into the market. So what does that mean? Well, with more competition on the market and not having a plethora of homes to choose from, that's when we see home prices start to increase. Rates go down, we can see home prices go up because more people enter the market. So let's say rates don't go down a point, but they do go down, so we just see maybe a fraction of that many new buyers entering the market. Because of where we're at inventory-wise, there's a good chance there's going to be pressure on home prices to again increase because of how rates are going to perform, especially where we've been in the last year with interest rates. So that really is something to consider and think about when you're talking about buying a home. One thought about buying before rates come down or drop, however you want to phrase it, is appreciation. Because like I said, if rates come down, more people enter the market and it drives home prices up. So if you get in now, even though rates are a little bit higher, well, you could enjoy some appreciation as those home prices continue to climb with lower rates. Something you do want to consider though is if you were to buy now, yes, you're probably getting a more of a fair home price, and we don't know what interest rates might go down to when in fact they do go down, if they go down, right? We don't always know. But the thought is, what's the difference really in payment at your price point? Is a half point make a huge difference in your overall monthly payment to capture that appreciation, knowing that you can refinance? But that's the other thing. There are costs to refinancing your loan. So which outweighs which? Is it better to pay more for a house because you got a lower interest rate, or buy now before those rates drop because home prices are going to go up? I'm not saying this to add confusion, but give you something to think about. Personally, if it's me, I don't mind a little bit of a higher interest rate because I know the home is going to appreciate, and I don't mind refinancing to drop my rate if I plan on being in that property for 5 to 7 years. I think it raises some good questions and it gives us a few different things to think about. So if you have questions, feel free to drop a comment. Thanks for checking out the video. We'll see you at the next one.